Hey guys, welcome back to part 2 of the Game of Life. So, you have figured out your GPA, which allowed you to see what kind of degree you got, and then you were able to pick a job based on that degree, and your job was to figure out what your yearly income was, or annual income. So, the next part we're going to figure out is federal and state tax. Now, this is not exactly how it works. It is much more complicated, so I'm just giving you like a little idea of it. I still don't really understand it myself. That's why they make accountants and tax programs. Essentially on your paycheck each month, you are going to get a certain amount of federal and state tax taken out. And then we'll pause there and I'll finish in a second. So the first one we're going to figure out is your federal tax. Okay, so we are still saying that you are filing as a single taxpayer. Okay, and we're going to assume that your income is between $37,000 and $91,000. Most of the jobs that y'all have should be. Even if it's not, just use the following formula. So you're going to take $5,226.25 plus you're going to take 25% of your income minus $37,950. Now, these numbers all come from the federal tax brackets based on certain percents. If you want to Google Georgia federal tax brackets and try and figure it out, good luck. So, here is my example. So, all you do is plug in your information. So, my annual income was $76,384. So I plugged that in here to the formula. Okay, next you are going to follow order of operations. So, math, you're going to do parentheses first. So I used my calculator, I subtracted those two numbers and got $38,435. Okay, now I'm going to take 25% of that. Okay, so 25% of $38,435 is $9,608.75. Okay, so they're going to take that amount plus an additional $5,226.25. So the total amount that is taken out for federal taxes is going to be $14,875. Okay, that's a lot of money. So you're going to put that right here. So that's your amount of federal income tax, okay? When you get taxes taken out each month, let's say you get more than $14,000 total taken out, you will earn money back come tax season. If you get less than $14,875, you're going to get more taken out. Okay, next up is state tax. So here is our formula for state tax. Okay, so for single taxpayers whose income is greater than $7,000, which should be all of you, you're going to use the formula. So you're going to take $230 plus 6% of your income minus $7,000. Again, these numbers come from other tax brackets, which you can look into, but I'm going to be honest, I don't quite even understand them. So, again, you follow order of operations. I plug in my income, which was $76,384, and I subtract $7,000. Okay, next comes parentheses, so I subtract those, and I get $69,384. Okay, they are going to take 6% of that, which means we multiply. So I multiply 6% of that, and I get $4,163.04. Okay, you have to take an additional $230 and add it to that. So my grand total state tax is $4,393.04. So I filled that out down here. Okay, so again, when each month you get taxes taken out, at the end of the year, when tax season comes around, if you took out more than $4,393.04, you will get that returned to you. That's called a tax return. If you took out less than that, you will owe money. Okay? So again, this is data from 2017, and this is a much simplified version of actual federal and state taxes. It is actually very confusing. I hope that my examples helped you, and if not, let me know and ask questions. Good luck!